Hello, traders. Gary Wagner here. It is 11:47 in Honolulu, 5:47 in New York on Monday, 10th day of April, 2023, and this is the Daily Report for Gold and Silver. There was definitely a delayed reaction to Friday's jobs report in that gold trading was closed on Good Friday last week. Today we saw it drop in reaction to that report. The other thing we want to be aware of is the $6 trillion debt problem that threatens to push inflation even higher. That amount is directly tied to the swelling of the asset sheet by the Federal Reserve. Currently, the Federal Reserve pays over $750 million in interest every day to banks, hedge funds, and other large financial institutions that they have parked $5.7 trillion in their vaults. Gold traded to a low today of $1,996.50 and is currently fixed down $19.80 or almost a percentage point at $2,006.60. That affected our trade. We'll talk about that in detail when we look at some charts. Part of today's decline can be directly attributed to dollar strength, up 0.5%, with the index fixed at 102.235. Lastly, silver had a more modest decline of 0.33%, or about 8 cents, taking the most active May contract to $25.01. Because gold futures did not trade on Friday, closed for Good Friday, we got our reaction beginning in Australia Sunday, here in Hawaii and the mainland, which of course is Monday in Australia. I draw your attention to the low today that came in at around 1996, and that matches up very closely to a high that occurred in April or May of last year. That is this high right here, and it also comes in right around what was resistance before we broke above $2,000 per ounce. Now, gold did recover. It is currently trading above $2,000 at $2,006.40. The question is whether or not this decline is a one and done or the beginning of a deeper correction. We are looking at a 480-minute standard candlestick chart. We can see that as it opened in Australia and began to move down, it traded to a series of lower lows and lower highs, almost each candle. As you can see, we are currently fixed at 206. My belief is that we could be witnessing a one and done. If it does continue lower, I'm going to look at this trend line, which was the upper level resistance of the compression triangle that actually sparked our last trade, as our support area, and this comes in at around 1990 to 1995. So I don't think that there is much more potential downside, even if it does track lower. However, it did stop us out of our trade. We went long at 2,000 or better, and our stop was hit at 2013 for a profit of $1,300 per COMEX contract. We'll have to watch it carefully to see if gold finds support at these current lows and moves back higher, or if it tracks to the lower level mark that I've identified as our current support line, which is the former resistance line carried forward. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.